Argentina needs to be the best performer in terms of, in macroeconomic terms.
Okay, so it's very refreshing to be back in Buenos Aires. We're actually going to be doing this in English, Spanglish, you know, like a bit of everything for everyone to feel very comfortable. I'm just going to say that it's very encouraging to see the development of the local ecosystem and what you guys have been able to achieve in the past decade. It's refreshing to hear the corporations being so active, the institutional investors, stakeholders actually being part of the conversation more and more every time. But here, we're actually going to have a conversation starting to talk about Argentina as part of Latam, and then Latam as part of the world. Sounds very, very corny and very open-minded, but hopefully we can actually keep it interesting here. Let me start with you, Susana. Maybe you can tell a bit more about Capri and everything, but you've been investing in Argentina for a long time as part of IDB Lab, now as part of Capri. What's interesting in the market right now? What are you seeing in terms of good opportunities? And then we can take it from there.
Well, first of all, besides thanking very much ARCAP for the invitation, I want to say that I always believe, and it's not because I'm Argentinian, because in many ways I haven't been living in this country for decades, but when you see the Argentine entrepreneur, you know that if you have patience, given the ups and downs of the economy, that patience is going to pay off. So from the very beginning, I started investing in funds, later on in companies, and once in a while, I have to say that my boss at the time and the IDB would be like, do you really want to keep investing in Argentina, or depending on the year, in Brazil? And I would always say the same. You have to keep at it, and in the end, everything will turn out right. So, you know, I believe in the resilience of the region overall, but obviously, the Argentine entrepreneur is very resilient, and I don't need to go on the details about that, it's obvious, but the level of innovation, the level of some of the entrepreneurs presented in this panel says it all. So it is a fertile ground for entrepreneurship, for innovation, and for making money. So I'm a big believer. Capri Ventures is a global South fund that invests in the tech hubs of Latin America, Africa, India, and some countries in the Southeast Asia region. And believe me, my partners, one is Indian, the other one is Nigerian, one Canadian, one American, and me, and they all believe in Argentina.
Okay, that's a great introduction, and we're going to have a little bit of a conversation on what can either Argentina, Latin America in general can learn of Brazil. But first, before going to that, you guys did Henry a little while ago. You've been active in the Argentine market, born out of Mexico. But how has your perspective of the Argentine market changed? And maybe are there some cool business models that actually Argentines can learn from Mexico? Because I think this audience knows very well what other parts of Latin America can learn from Argentina. But what about the other way around?
So let me start by saying, Carlos, I think that, following on Susana's comment, I think that this global ambition, this global confidence that Argentine entrepreneurs have is quite unique. Throughout a very short or relatively short investment career, I had the chance to meet and to assess entrepreneurs and companies from all across the globe. So from Southeast Asia, Middle East, Africa, Europe, several countries in Latin America. And I just haven't seen this kind of global mindset in other markets. So I think that's quite a relevant asset when you think about Argentina. Following on that comment, I believe that this trend of seeing Argentine entrepreneurs building globally will continue, and it should continue, because as you probably know, there's a very strong and positive correlation between the number of markets you operate in and the ability as a company to access capital, right? So if you're an Argentine entrepreneur and you're expanding to Mexico or you're expanding to Brazil, all of a sudden you're unlocking access to a much larger pool of capital, right? And if you go to the US, if you go to Europe, as many Argentine entrepreneurs have done, most likely you will become an attractive asset for, I don't know, financial or strategic global players that you probably didn't even know existed before, right? So what I think we will be seeing in the short term, when you're asking about our Argentine entrepreneurs and operating here, is I think that there's been this, and we talked about it some time ago, about this Argentina as a testing ground, right? What I think we will be seeing, assuming we reach macroeconomic stability here in the country, is a transition from this Argentina as a testing ground and going to, I would say, a middle ground, right? Where entrepreneurs will develop a stable, well-performing, and leading operation here in Argentina before expanding or while expanding. But again, assuming macroeconomic stability is reached, we're very bullish on the opportunities we will see Argentina.
No, that makes sense. I guess from the Argentina context, sometimes that the restrictions and the need actually becomes a feature, not a bug, of actually being able to solve some of these problems. But let's turn to maybe Priscilla, with your head of both Crecera and ABCAP. Looking at the GPs and the managers, investors actually looking at opportunities, not only in Brazil, doing cross-border deals, looking at deal flow outside of Brazil, what can make it attractive for them to look into the country?
Well, good afternoon, everyone. It's a pleasure to be here. Thank you, ARCAP, for the invitation, and Carlos for moderating us. It's a pleasure to be here with such a great group of investors. My view is that, and we've been seeing this in Brazil for quite some time, is that the local market in Brazil is large. And I heard someone saying about it in a panel a little bit earlier, that the challenge in Argentina is that there is 50 million people, but it's also a very good advantage because it gives you the global footprint that you, and the global mindset that you just mentioned, in the sense that in order to grow businesses and think about very good investment, very good opportunities, you end up looking abroad as a very good opportunity for growth. In Brazil, it's the other way around. We have around 210 million people and a very large local market that sometimes catch the attention of entrepreneurs and several corporations throughout the first few years of their existence in order for them to then be ready to extend its focus to international markets and the rest of Latin America. The language barrier is also an issue for that in certain situations. But what we've been seeing in terms of a very important increasing trend, especially on the venture capital world, and especially in technology, as technology and solutions and digital transformations can be used internationally and they don't necessarily follow frontiers, entrepreneurs already set up their business thinking about a global scale. And we're seeing this more in technology than in other sectors in Brazil, and with Brazilian entrepreneurs. And with funds that are local, they're either based there or regional funds that have operations out of Brazil. They're now looking for a very large opportunity set in terms of where to invest beyond the frontiers. And I think this is a trend that eventually we'll see in other sectors. So it's a very positive outlook on that front in terms of allocation. This is more on the earlier stage. When you think in terms of later stage, venture, private equity, and even more specialized solutions, then it's a little bit more local in terms of focus. But it starts with, someone has to start, right? And it's usually the technology entrepreneurs that do that. And I agree with Susana, there's some amazing discussions here today. And you can see the quality of those entrepreneurs, the DNA behind building businesses and the opportunities, and the global mindset will be very, very important to put even further more Argentina into the footprint for allocations.
And you touched on a very interesting point there, because there's always been this dilemma in terms of capital availability in not only Argentina, but in the region, right? The majority of the capital is actually coming in early stages, but there's always the chicken and egg kind of situation where people ask, if the opportunities are there, then capital will follow, but we need capital to build. So how can we actually build and be resilient in that regard? So Rodrigo, for example, shifting a little bit the conversation to that part of a talent conversation in Argentina, we're not going to go over that again because we've heard it throughout the entire day. But when an Argentine entrepreneur is trying to build globally, and they come and talk to you at Upload, what are you looking for specifically, and what attracts you from that type of opportunity?
So I think the key is being able to compete globally, right? And whereas we do have amazing technical talent in Argentina, there will be components of it, especially if you're competing on a SaaS or on a more B2B play, that are not available here and are not available even in Brazil at this point. Like product marketing, even a stronger product management role. And you need to complement the local team with international talent. Also, the go-to-market becomes a very important component to it, especially when you're talking about going to the US market. So how you actually thinking about setting up your sales team or your go-to-market strategy is also something that we try to provoke early on to see if the person is already thinking about it. Is this going to be a PLG growth, or is it going to be a field sales? And understanding who they're going to hire and how they're going to build that infrastructure, because that's going to need to be a local team in the US. So how do you actually manage that transition and that cultural shift in the organization? So those are the components that catch our eye when we're thinking about building a global company coming out of any of our Latin American countries.
But for example, like just double click on what you said right now. When you're talking with these founders, and it depends on every business model and every vertical, but is your eye set on they need to dominate a substantial amount of local market share before they jump countries? Or are you already thinking this person, how can they materialize that global mindset and executions from day one?
That really depends on the company and on the product and on the strategy. Right, and we've seen successes across the board in very different approaches, right? We've seen Gympass that started in Brazil, got scaled in Brazil, expanded to Europe, now is going back to the US, right? Because that's where the product led them. As it was a benefits product, it's much more appealing to European corporations than to US corporations. Pipefy, which is a self-service product, right? You swipe your credit card and you start using it, was born global from day one. The day he pulled up the site, 192 countries were using it. And you have to tailor the growth strategy to your product. If you take Pismo, which is selling core banking, right, to very large incumbents, that needs to start globally, because locally, because that's where you're going to have the relationships. You're not going to get the CIO of Citibank to sit with you, ever, even if you're an American company, right? But you can do that with Itaú, you can do that with the Brazilian Stock Exchange. So each company will have a different go-to-market based on their product.
But if I can add to that, at least for us in Capria, what we notice is that the best entrepreneurs are the ones that are already thinking from day one how to expand, not necessarily putting the pressure on themselves that it has to do or to be a quick expansion, but it's not an afterthought. Some years ago, in some of our countries in Latam, you would talk to good entrepreneurs, and their way of expanding was from one state of province to the other one, finally the country, and maybe another country. You don't find that anymore, and I think that also is a benefit, if you can call it like that, of the pandemic, that really helped us see that we could expand beyond frontiers. And in Argentina, you had that even before, because the entrepreneur was very lonely, so it had to really expand the frontiers of their own ventures to make it happen.
So please.
Yeah, no, and just adding to what Rodrigo said, we usually use the term like global by default. And the things we look at, I mean, it's basically one thing that we look at models that are global by default is the degree of localization that the company requires at every level. So technology-wise, product-wise, go-to-market-wise, customer service-wise, which is operational. But I think that's the key when you analyze global models like we've seen OutZero, Mural, other Argentine examples. they have this very low degree of localization at every level in the company, right? I think that's what we think is the key when we look at those models.
So there's no such thing as being overly ambitious when you're building from Argentina to the world?
I don't think so.
Okay, now talking specifically about the world in that last part, right? No one here is a stranger to the global geopolitical shifts that have been happening for the past couple of years, and I think it's important for us to touch on them. Not going to talk about politics or elections. That's not going to be part of the conversation. No. but I think it's important for us to touch on the fact that there is still this impression of global allocation into emerging markets, funds, and companies shifting from Asia to Latin America and to other regions as part of this shift. How are you seeing this in terms of your conversations with institutional investors? And what are some of the reservations that they still have in order to consider Latin America the way that we consider it here? Please, Priscilla.
That's a very good question, because I think it should be on everyone's mind that invest out of Latin America or out of the region. The main goal is how can we attract more capital from international investors to here. And every time you go talk to international investors, and I've been doing this for quite some time, the feedback has always been we have around 40 to 45% of our allocation in the US, we have around 40 to 45% of our allocation in Europe, and then the rest of the world keeps around 10 to 15%. And we look about rest of the world, they divide in like Middle Eastern, Australia and the region, China, Africa, and then Latin America. China has got the attention for those international allocators for quite some time, a very large allocation. There's the result of that very high allocation has been on a lot of reliance on the global footprint from Chinese products. As everyone is following on the discussions, there has been a very important global shift in terms of supply base. Where should we get our supply? How rely we should on one country or another? How dependent we need to be from one country to another, which creates a huge opportunity for other regions to put a footprint into a very important global economic in the sense of a supply base that is very beneficial for Latin America and for South America overall. Mexico has been a country that has gained a lot of attention because of the nearshoring with the United States. But everywhere else in Latin America, we should be in a very good position to build business to supply that global footprint. But the main reason is that we're not involved in a lot of geopolitical fights, to not use for the lack of a better word. So we are in a position that we can do businesses with every other place. And as a consequence, the companies that are grown within the region can be in a very good position to grow internationally by setting up agreements and partnerships with all other countries in the world. The challenge has always been on how to access the capital and how much you can actually get out of it. There was a lot of expectations that with China losing attraction or losing attention, the money could flow and we could gain more of the share of wallet for Latin America. We haven't seen this over the last couple of years as we should. It was a big shift from China to Southeast Asia. We haven't been very good at attracting that capital as we could to the region.
But we also got very unlucky, right?
We got very unlucky because
there's a massive liquidity crunch across the board.
Yeah.
And especially with the allocation to emerging markets, because no money is coming out of China at this point.
No money is coming out of almost nowhere, right, in terms of liquidity.
Soon.
But China is not providing that liquidity that could attract more capital. But I also think there are three things that we haven't been very good in doing in the region overall. That's the same for Brazil. It's the same somehow for Argentina. It's the same for all the other Andean and Latin countries, which is we are not very good communicators abroad in terms of how good our companies are and what are the good case studies and the good stories that we have. And the main reason is because it's so dry, the access to capital, that each one of us as different managers, we go on our own path to raise capital. We go, like, we do all that effort to talk to international investors to raise money for our own funds. And we don't look at the region as an overall region and say, listen, let us explain you, and this is why events like this one and events similar to these ones that take place in Latin America are so important, with the associations playing a very important role, because we need to explain overall, this is how good the managers are, it's how many stories we have, bring more money. Like, just don't use the region as a contrarian, bring more money. So this is one communication. Then we still have a lot of political instability, to say, that end up impacting significantly exchange rates. And then with exchange rate risks, sometimes some investors shy away on increasing their allocation. But as things get better, as we can show that the rule of law exists in a few countries and it's growing even further all the time, that the judiciary system protects investment, that the regulators put together structures that are positive for capital allocation, and we can see more and more time. It's a never-ending effort to
But
attract
I also
capital.
think that there is another issue, and we invest in India. Our story starts in India. So in India, Indian investors believe in India, invest in India, invest in funds in India, and invest in companies. We still need to have more local investors investing in each of the countries, because the foreigner is going to look and say, why am I going to be the guinea pig? If you, who have money, pension fund, family office, corporation, are not investing, it makes me doubt. And we know the famous story of Rappi, of Notco, so many saying, yeah, you didn't put money. If my own country didn't put money in me, it had to be taken by an international investor. So I really hope that, and it has been said in many of the panels, that those who have the capability to invest in these wonderful entrepreneurs we heard about today and the many more that are out there, and also the funds trying to do that, do it. Because I live in the US, and I know very well the mindset of a US investor, and believe me, they are not going to put money if they don't see that you guys are the ones betting on what you believe is the future.
And it has two sides to that, right? Because, well, sorry, no, I actually want to compliment.
I was going to say, this is a very important comment that Susana made, because we saw in Brazil a significant increase in terms of liquidity for access to capital to new managers and current managers when Brazilians start deploying capital to the strategies. And we know that the main reason is not only because they think that the alternatives is a good strategy and deploying in companies. We saw a significant decrease in terms of interest rates, which allow them to look at other alternatives and deploy capital. And this was a significant shift of capital to additional capital to the segment that helped develop significantly the investment thesis from all managers. But it's a very important point. If we don't believe that in our regions, in our countries, we have good companies and we should be deploying our own capital here, and we want to take the money and invest abroad, then why would someone from the outside think differently?
I mean, I think what's going on is local institutional capital still needs, just to put a word, right, to be educated or to learn more about the asset class and what's going on internationally. Is those guys, those funds, really understand the asset class and they have exposure to the asset class, and what we need to do there is to sell the region, not the asset class. So I think that's both things are happening.
I think no, go ahead, please.
And it's important to highlight, right? If you look at the region, it's hyper efficient in capital allocation, right? For each $1 billion deployed in Latin America, we created 0.9 unicorns. The second best market is India with 0.6. Israel, which everybody talks about, is 0.3. So it's highly inefficient in terms of creating big companies. And that translates into returns for funds. Atlantico just published, but 50% of the Brazilian funds would be in the top quartile globally. 25% of the Brazilian funds are in the top 5% globally. And that's driven by scarcity of capital, right? When there is that level of scarcity, you can really allocate much better your resources and get better deals when doing it. So as long as we don't flush the market with too much capital, this should be a market that should be highly profitable to be investing in.
We can have a whole other conversation about whether the market is undercapitalized or capitalized correctly or anything, because I think, at least on behalf of LAFCA, we do believe that there is some room for growth and capital absorption yet. Maybe not at a $2 billion run rate every year in terms of capital, but there is still room for growth there. But just to say, when we're talking about commitment and skin in the game, that also translates, for example, when we're talking with global investors that are looking into, for example, local portfolio companies. And then there's also a signaling risk of, why don't you have a local fund in your cap table? They have asked us that question, because fund managers locally are the ones who understand the markets locally, and if you actually cannot raise capital locally, there might be some sort of risk embedded into that. That might be another conversation as well, for that liquidity in terms of capital liquidity. Just to say and complement that last point on China, before we move to something else. But we're actually going to be publishing some figures that say that this Q3 of this year, 2024, has been the lowest year of capital deployment in China in more than 13 years. In more than 13 years. So the China growth story is over for now. So does that mean that it's now the time for the Latam story? And I think hopefully what Priscilla was saying is actually going to come to fruition. But let's actually talk a little bit more about that bilateral relationship between Argentina and Brazil, right? And we had a little bit of a prep call before this, where we were discussing what are some of the things that Argentina, from a public policy perspective, if I may, can actually learn from the Brazilian market. And the reason I'm asking this is because, as we've all seen in the newspapers and in fireside chats and in talks, there's a really good and very robust goodwill of the local government in Argentina to make things work. But how does that translate from regulatory initiative to regulatory permanence, which is important for the funds? I don't know if maybe Priscilla, you want to take this one?
Brazil has done a very important and long work with the private sector and the regulators to set up some structures that are beneficial for international investors, that protect the allocation of capital and that protect capital gains in terms of money coming into their country and getting out. There's still a long way, and it's an evolving process that every time you can improve it further. But there was an important work that has been done with CVM and the regulators to attract capital, which is something that once you change the law, once you set up this new rule, that if you do through an FIP with the FIP instrument, you can do investments through FIP, and then you can gain, and it can be tax exempt for international investors, and you protect the limited liability on the allocation for funds. That is the first, I would say, the first benefit and the first potential upside for investors to start looking at it. And it's a change that when it's implemented, it's there to stay. So I think there are a few things and a few learnings that can be done either from Brazil or from Chile. Chile has done something similar in different ways, but a little bit similar. Colombia has done some others. Mexico is doing something a little bit different, but I think you can cherry pick which was like the good regulations changed and pass a bill on that front. Then once it's stabilized, I think that provides international investors with a little bit more security that if they deploy money, they will be able to take it out.
There is one thing that I want to highlight about Mexico, and I don't even know if Adriana is here. Yeah, I think Mexico, many, many months ago, from the government agencies understood that making the commitment in a fund and telling the fund you can only invest in Mexico or in Mexican companies was not gonna position the country. And they were very pioneers. Brazil was pioneer in everything else, but not in that one. And it took many years for Brazil to understand that you had to allow funds and companies not to be restricted to the money. So I would say if the government is thinking of any policy, look at a way in which you want Argentina to figure in the global investors map, not in the Argentine investors map. So that would be my appeal.
we are almost out of time. So if you have literally just 20 seconds each, and if I may, 20 seconds each, and then we can close it out. Maybe, Joaquin, what do you want to close us out with?
No, I mean, just thinking about where's the Argentine market going is, we invest really early, and for us, it's not about macroeconomic performance. It's not that Argentina needs to be the best performer in macroeconomic terms. It's about macroeconomic stability, and I think that's it. The companies we invest in are very young, and they don't have the luxury or other resources to be allocating, 20, 30, 40 minutes of a board meeting or internal meeting to be discussing inflation, devaluation, cross-border payment restriction. So I think as long as you take those variables out of the question, I think Argentina is ready to go, I think.
My 2 seconds could be never doubt, and this goes for both entrepreneurs and fund managers, never doubt that the innovation that is coming out of Argentina is true innovation. Is local problems that can become global because there are a lot of challenges here that translate across the global south. The innovation here is fantastic, so keep up the good work.
Priscila.
I think on the same talk of what Rodrigo mentioned in terms of having the ability to deploy capital in very good companies when there is not a lot of capital availability, that also creates a very important resilient level within the entrepreneur mindset, which allows them to figure out ways to fix and problem solving better than if you have access to a lot of capital. That's a very unique differential from Argentina, from Brazil, from several other places in the world that can create very unique opportunities. So never let that drop, because I think this is out of adversity comes very, very good opportunities. And I think we've been all very keen on seeing some of these examples today. And I know for sure there will be tons of them in the future.
Rodrigo.
Yeah, I would say don't be constrained to the local market, right? Anything.com for Argentina is set to be at least at maximum 0.5% of the reference company globally. So don't set yourself up for failure, think it bigger, build a reference company.